Good evening. I'd like to call to order our business committee meeting. With roll call.
Myron White.
Yes.
Ms. Marion Fertitta.
Here.
Ms. Leslie Wells.
Here.
We have a quorum.
2. Item 8, the insurance. To consider the renewal quotes of certain casualty and liability insurance policies that renew in February 2026, as recommended by Karma Bro of Norris Insurance Consultants, Inc.
The time just goes by so quick. It feels like I was here yesterday doing this. In front of you, you should have my spreadsheet, and I'm hoping y'all had a chance to look at it. I'm going to go through it really quick. Stop me though if you have questions. The renewal came in really good, in my opinion, this year. Column 4 is the renewal being offered by your current agent, which is Jones Agency. Current insurance carrier is Hudson Insurance. The same limits, terms, conditions, and everything for your general liability. This is your package policy of all your liabilities, the $1 million, $2 million limit, the $150,000 deductible. When you go down to line 16, A16, the premium for this year will be $315,222, about a $19,000 increase over expiring, about a 6% increase. You're my first client renewing for 2026. So to say I've had others so I can see what the experience is, I don't know yet. But everything that I have been reading in my last couple of renewals at the end of 2025, I am seeing increases on the liability side in the neighborhood of 9 to 13%. So for you to come in at 6%, I was really happy because I was anticipating it to be a little bit more. So I was happy with the 6% on that. Going down the page, the auto liability, part of the package, the $1 million limit, the $150,000 deductible. The premium for your auto liability is included in at $315,000. Then you have your comprehensive and your collision. That's on all of your buses. You'll notice on the very first line, C1, the value of your fleet has increased about $274,000. We're a little over $12 million for this next year. The deductible will remain the same at $15,000, and that premium is included in that $315,000. Then when you flip to page 2, you have your board management liability, which is your errors and omissions coverage. Again, the same $1 million, $2 million limit, the $150,000 SIR. You have full prior acts for this type of policy. And then the sexual abuse coverage is still the $1 million, $2 million. Now the sexual abuse has a different retro date. They do not cover, Hudson does not cover full prior acts. They only go back to 2/15 of 2006. So anything prior to 2006, you have no coverage for. Hopefully we have nothing come up, but going forward from 2006. So it's important that we keep that date, the 2006 date. The annual premium is included in at $315,000. And then when you go to section E, that's your crime insurance, which is your employee dishonesty. Again, it's with Hanover. This is your third year. This was a 3-year policy. This is the third year of the 3-year policy. You have the $1 million limit, a $10,000 deductible. Go down to line 9. The premium is still the $7,774 for this year. This will be the final year. Next year we'll see something different there. When you go to page 3, section F, this is your violent malicious acts coverage. It is with a Lloyd's of London syndicate. Still the same limits, the $1 million limit, the $15,000 deductible. That premium on line 5, you'll see is $17,300. It's about a $900 increase over expiring. And then the last item, the equipment breakdown, which is also your ball of machinery coverage, still with Larice Agency. I think they changed their name to Aquashore now. It's Travelers Insurance Company. The equipment breakdown limit is still the 100 million. The deductible is still the 5,000. That premium, when you go across, you'll see on line 15, this renewal is going to be $31,625, about a $3,300 decrease, and that's because two things. Equipment breakdown is kind of considered a property policy, and we're seeing property rates continuously going down, which is good for you. And so that's one reason. The other reason is your statement of values. You can see at the very top line there. Last year it was based on 482 million. This year, the statement that we have is at 414 million. So it's a little bit less because we've cleaned the statement of values up a little for you. So the grand total for all of these policies is going to be $371,921. It's about a $16,000 total increase over expiring. I'm going to recommend that you renew all of these policies for this year. I'll also recommend you to make a separate motion for the board to approve the rejection on the automobile liability section and give approval to the superintendent to sign the uninsured motorist rejection form. Any questions?
I do have a question. So in the section G, the annual premium that we are showing, as well as section H, the grand total, the figures are a little different by a couple of $1,000s. Your quote that you just spoke was a little bit lower. I just wanted to verify those numbers.
She estimated, I think it's because she estimated that.
Yeah, estimated.
Okay,
Yeah.
okay, so it didn't get swapped out. I thought it was getting swapped out.
Okay.
Okay.
So the actual
This
premium at
afternoon,
31.
I got the actual number in, the sheet that you're looking at, the 33,000 on it. That was just estimated. I estimated, that's what I was anticipating it to be. The actual quote came in this afternoon, and I changed it on mine. That's what I was reading from. And I had sent it, I didn't know if it had gotten, I hadn't noticed that it hadn't changed on y'all document.
Will you read it again? What was it?
Okay, the total premium for the equipment breakdown is $31,625. And the total is $371,921. That's a couple thousand less.
Yeah.
Thank you. You're welcome.
So the recommended action is to accept the renewal quote from Ms. Carmel Bro at column 4 with the total proposed premium of $371,921 and to reject the uninsured motorist, reject terrorism coverage, and to authorize the superintendent to sign all documents related to the renewal.
Well, any public comments? Any board comments? We'll vote. All in favor, say aye.
Aye.
All opposed, say nay. That motion carries.
We need to.
Item 2. Item
Okay, that's all I need to know. Thank you.
to consider renewing the Norris Insurance Consulting Inc. contract to provide certificate management services and insurance consulting services as recommended by Carmel Bro of Norris Insurance Consulting Inc. Do I have a motion? Motion by Ms. Wells, and by Ms. Petita. Any public comments? Any board comments? Not all in favor by voting by saying aye.
Aye.
All in favor, all opposed by saying nay. That motion carries. Number 3, finance. Item A, to receive reports or requests for proposals for point of scale for electronic ticketing and cashless systems and take appropriate action. Ms. Montana.
Good evening. Before you are the RFP results from the point of sale for electronic ticketing and cashless systems. My recommended action is to receive reports on the request for proposals and to award the highest, most responsive and responsible proposer, which is GoFans, as the awarded vendor, and this would be at no cost to the
So this is not, we're not voting to implement this, or we are voting to implement this by accepting this.
By accepting it, you're going to allow the district to begin implementation as we figure it out. So this would be the vendor that would provide the service that we are figuring out if it's a good fit for us or not. But we first need to award a vendor, then meet with the vendor and arrive at what this is going to look like. I would anticipate a pilot, a couple of locations and select activities, and then expand as we can. But the way that this thing is funded, the reason why it's no cost to the board is that they make percentages of transactions. So what we'll have to do is adjust our pricing to reflect the slightly increased cost of operations, but the amount of labor and time reduced on our end more than justifies the expense of the transaction as it was.
But so when we talked about bringing this up, I had actually had a couple phone calls about it because people are concerned about, one, who's going to eat the cost of the transaction extra fee? Is it going to be the kids and the public, or is it going to be us? And number two, people are worried about a cash option as well. Even though we're implementing this, they still want a cash option.
For sure. So we're likely going to retain a cash option done beforehand and or at some other location, right? So if you turn up to a thing with cash, there's going to be a process. We don't know what that's going to look like yet, and we're not committed to going fully cashless, but we definitely want to reduce the volume of cash sales. Again, the best example is just to go to a Friday night football game and just recognize the volume of coins and cash. So we're hoping that this is going to help folks. But to answer your question, it's going to be a shared expense on both the district and the institution because we're going to have to adjust prices, right? So in some cases, if the ticket was $5 and I don't want to go up to $6, then when you say the district, it's actually going to be whatever the institution conducting the activity is going to eat the cost. But if in light of this, cross-country doing a cake sale says, well, instead of charging 10, we're going to charge 11 to make up for it, then it would be the consumer that would get it. But in most cases, we believe that the cashless option is going to increase the volume of activity that will erode any not realized revenue because of some appreciated return on investment, as it were. I'm clumsily trying to explain.
No, I understand.
By doing more of it, you're going to make more money.
Correct.
There's a lot of times that I would have participated. I see a car wash as I drive by, some kids out there, oh, I don't have cash, so
Just
I'm
like
not going to stop.
concession,
But if I could have tapped my debit card, I'd have probably gotten my truck washed and the red dirt would be gone. That's just a small example.
Right.
It's still on there.
But, well, yeah, I guess it's a percentage of the sale. Like, you don't want to say, hey, it's $1 extra, because that's a lot. If you paying $5 to get in something.
Correct. So we're going to have to figure that out for each transaction, and I think it's going to be up to each institution to figure that out. But again, we still anticipate a world where cash is still an option, but it probably won't be as convenient as the cashless option.
And that would be included on concessions and stuff like that, right?
Yes, ma'am. This could replace every transaction in theory that we have. But again, from my standpoint, I've got Mr. Freddie here in the audience, right? From an auditing standpoint, this is a much better process to guarantee that what was taken in was actually received, and you didn't have anything either through human error or negligence and or criminal activity that these things can become potentially problematic. This is a more foolproof method.
And wherever we go with basketball in high schools all over, they're using it. And but I would rather see us decide you don't have not a policy, but this is, rather than the school deciding, I would rather see blanket, like this is what you're gonna charge above it. Because then you're gonna have some that'll be charging $1, some that, especially like in your middle schools and stuff, I think it should be we should decide, okay, this is what's gonna eat the cost, and this is how much we're gonna charge.
Yeah,
Think about that.
yes, ma'am. We want to be as consistent as possible. We're going to work through all of that with the vendor and come up with some best practices and see where this is being done and done well. I think it's great to give the families a cashless option, but to Ms. Wells's point and to yours, we certainly don't want to increase the price of a basketball game because of this.
And it's so convenient because you don't have to run and get cash.
But you still
to
have
go to
these
the
kids who
game,
don't have
you
a
know.
card, like high school kids who don't have access to electronic payment methods.
Right, but it's really convenient and definitely safer for the schools.
For sure. And the other thing to your point as well is that we want to work with this vendor about it and getting to we both have teenagers, and my kids don't run around with cords either. But what I'm hoping is that this becomes so seamless that parents online through just a text message can pay for the kids' entry, and then the ticket shows up on the child's phone and they walk in. So then you don't have to give them anything. So I think that this is going to be a win, but we're going to start small, learn what really works well, and then go out from there.
I also like to see one day, like in college, you can put money on a card. I can see students there put money on the ID card.
So another option would be, and I don't know if this vendor is going to have this capacity, I would assume that they would, but to be able to utilize for those without cards, they all have this. So Apple Pay or whatever the Google Pay, Samsung Pay, whatever it's called, the Android version, to be able to utilize that, and therefore the students, if they're not in their parents' company and don't have their own cards, they can use that. And I think that having a system or a vendor, an official vendor, legitimizes the cashless transaction, because I know that in some instances that there have been like little signs up at like a ticket booth that Venmo or something was available. But I think that it's somewhere in the back of your mind, you can have a question of whose Venmo account is this going to? Is this some parent, and we're assuming that that's going to get transferred appropriately to the school. I think that takes that inappropriate potential out of the equation.
Absolutely.
My district that I work in is cashless, and just to your point, they do Apple Pay. And when I go and purchase something, like if I purchase, we have a site intern cafeteria, pizzeria. When I purchase something, so a student of the month, I tap my watch. I don't need a card. I don't need my phone. I don't need anything. It can go to your phone. You can scan that, or you can scan
Is
it.
there any cash option at all, or it's just cashless?
In my district, it's cash.
So what do y'all do, for instance, when y'all have like a kid that comes from poverty, doesn't have access to a cell phone,
I'm gonna be honest with you, I don't have the answer for that question.
I'm just
I
curious
really
about that population.
I do know that a lot of kids also, their parents will go and get them like, and this costs, but the parents will go get those gift cards, like prepaid gift cards, and they'll use that sometimes.
Vanilla.
Right, but I know a lot of them use their phones and
You
stuff
can
like
get
that.
if you do have a Venmo account, now it has to be tied to a funding source, like a bank account or whatnot, but you can get a Venmo account for a teen. They have to be 13, and that's free. So that's an option too, and it, it could just be an opportunity to educate people as far as options, when we get to that point, if we get to the fully cashless state at some point.
Forgot where we were on the process. Okay.
So motion by Ms. Petita, second by Ms. Wells. Do we have any other comments? More comments? No, we vote. All in favor, say aye. All opposed, say nay. Motion carries. Item B, to consider authorizing advertisement for bids on the following items needed by the Child Nutrition Department throughout the 2026-2027 school year as need arises in compliance with regulations of the State Department of Education. A, milk and milk products. B, bread. C, all other food items. D, janitorial and paper products. E, cleaning of grease traps. F, concentrated detergents, and take appropriate actions. That'll be this.
Hi, good evening, y'all. It's that time of year. I don't know who referenced it earlier. It feels like I was just here yesterday. But we're requesting, of course, this is all within compliance with Louisiana bid laws. To start our bid process, we have to get permission from the board to advertise.
All right, we have a motion. Motion by Ms. Wells, second by Ms. Petito. Any public comments? Any board comments? We'll vote all in favor by saying aye. Aye. All opposed, say nay. That motion carries. Item C, to consider authorizing advertisement for bids on small equipment and large equipment needed by the Child Nutrition Department throughout the 2026-2027 school year as the need arises in compliance with current bid laws and take appropriate action. Ms. Fletcher.
Same statement. We basically, after this approval at the February board meeting, we will start the process of updating all of our bid specifications and getting our bids ready to go. Typically, we do our bids anytime between March and May. That's the whole process between going out for bids as well as open them, evaluating them, and coming back before you in June to get everything approved.
No motion. Motion by Ms. Petito, second by Ms. Wells. Any public comment? Any board comments? We'll vote all in favor by saying aye. Aye. All opposed, say nay. That motion carries. Thank you. Thank you. Item D, to consider authorizing the superintendent to enter into an agreement with Leapfrog Consulting Services for automated human resources workflow system in alignment with recommendation from the recent HR assessment.
This morning, you have anything that you want me to?
Yeah, I can just kind of jump in and let Mr. Lee handle any details, but you remember, Mr. Byron from Leapfrog. We had him do a deep dive into the human resources department and really do sort of a systems functions check. He spent a lot of time with Mr. Lee. They had a Post-it note map that would have sent the brightest people on the planet into a tailspin. They filled up a whiteboard of all of the different onboarding and processes that they have to do. And at the end of it, we realized that we need to automate a tremendous amount of the things that we're doing. We have papers that are following papers, that are following people that are following papers. But to automate, someone has to both develop the system and then train the people on the system that has to be developed. And we do not have the skill set in-house to do this. And so what Leapfrog is able to do is to develop that system and then train the folks in the department on exactly how to use that system. And the fee associated with this, what Byron describes as a white glove creation of and then implementation of this program, is $47,790. But once complete and up and running, it is not, I believe, too bold to say that this could save us from hiring a person at that salary annually to do all of the work that these automated systems could eventually take on once we become proficient. So that's what we're asking you to approve. It's working with Leapfrog to develop the system and train HO on it. Did I miss anything, Mr. Lee?
And it'll speed up the process, the hiring process.
That's what I was about to say.
Yeah. That's the most complaints I
That's
get.
my question.
Especially-
Onboarding's gonna
Yeah.
be quicker.
So some of he's going to say yes, and I'm going to say maybe. And the reason why he would agree is because some of our onboarding processes are slowed because of statutorily required things such as physical and background checks that are sometimes out of our control. And so we have talked frequently about how much risk we're going to accept by going through the onboarding process while that process is happening in in parallel with that, so that you're provisionally hired. Let's do all of this. Let's get your email address. Let's get your accounts up and running so you can log into JCampus and you can't actually begin to work or be on campus until we get the results back. That's the tipping point that his department is in all of the time. And so that's what we've been talking with Byron about speeding that process up and not accepting any risk, because we never want to put prematurely a person in a position where they have not been filtered through those processes.
I was going to say that risk seems minimal because you did mention not allowing them access to campus yet, although they would have access to those digital resources. So if for some reason the physical and background checks come back with a flag, we can quickly turn off that access that they were provisionally given.
That is correct.
And they don't.
And so what this system will allow us to do, when it's automated, you don't have a person doing 3 days worth of paperwork to onboard somebody while there's a maybe out there relative to their background and or physical. If it's automated, that part gets speeded up while this is happening in the background. So it is definitely going to improve our system, but we will never be an agency that can say yes on Monday and you're teaching on Tuesday. By the very nature of what we do and how you have to do not just background, but through the criminal, but now we have the physical, and you have to do a check through the Department of Children and Family Services to make sure there's not some also catch on that front. So there may be some non-criminal activity that can now flag a person and prevent their employment as well.
I'm kind of hiding in the back. So concerning certified people coming in from newly graduates, so obviously throughout college, we require our students to have background checks to be able to come into residence. So is what we're doing adequate enough to meet the new expectations once they become employed? And could you take that proof of background check, obviously it's a year prior, as a conditional, not saying not to do hours, but to at least initially?
Yes, I'll say a little bit about it, that's okay. No, we have to do more than what y'all do. However, we have implemented, I started this when I was in the department. Every resident that we receive from Nichols, we background check anyway. Some districts do not. So they are already ahead of the game. And then we also get them ready to be substitutes. On the days when they're off from residency, they can sub in the school, make a little money. They're already in the system. They're ready to go. And so they walk in ready to go.
So they don't have
They
it.
already have had their background check, everything.
No, I appreciate
I
that.
started that a couple years ago.
I appreciate that. Perfect.
I can hook them and might keep them.
So here we have a motion. Motion by Ms. Wells, second by Ms. Petita. Any public comments? Any board comments? We vote by all in favor by saying aye. All opposed say nay. That motion carries. Item 8, to consider appointing Ms. Chastity Email as Director of Authority to the Louisiana Community Development Authority Board.
So this resolution is just a continuation of the resolution that was signed in 2024 when Ms. Ortiz left the district. This is in regards to our LCDA loan for Hurricane Ida. As part of receiving the loan, they asked that somebody be appointed from the district to go to annual meetings that they have. So this is what this is.
Second by Ms. Wells. Any further comments? No comments? We vote by saying all in favor by saying aye. All opposed say nay. That motion carries. Item F, to receive a report from Freddie Smith, independent auditor with Eisner Amper on the fiscal year 2024-2025 audit. Welcome, Mr. Freddie.
Thank you. Going to go over the results of the 2025 audit with you guys. Who's got the control? Okay, I'll just do that like I'm pressing the remote control. All right, we're going to look at a summary of the audit results, and then we're going to look at a few numbers, and then we'll go through a few communications with you as the representative of the board, just to know a little bit more about the product that we have provided. All right. If I only had 5 minutes to give my report, this is the one page I would cover. Please oblige me a little more time, but I promise not to take too much time. First of all, a little bit about the product that we provide. We provide a financial statement audit. That audit satisfies your requirement to hire an audit, to get an audit every year of your annual financial statements. It is not necessarily an audit of your procedures and your process. We look at those for the purposes of determining where the risk might be in the actual financial statement document, but our assurance is on the numbers within that financial report. That financial report is filed with the Legislative Auditor's Office, and it's available online on their website once they review it and post it, public information. Also, your report is filed with what they call EMA, which is the Municipal Securities Review Board, a product of the Municipal Securities Review Board, because you issue a pretty significant amount of debt, and that debt is publicly traded. Those financial statements are posted there. So those financial statements have to be audited, and that's what we do, and we end up giving a grade. That grade is an A. It's an unmodified opinion, which means there's no qualifications to us saying that these are fairly presented financial statements. All right, so thumbs up there. We also review or audit your federal programs as a condition to receiving these federal funds. You know, you guys receive upwards of $40 million in any one year. Case of 2021, 2022 is probably more than that because of FEMA funds. This year is around $40 million. We select certain federal programs every year based upon a risk-based criteria that the federal government lays out for us. Those two programs that we audited this year were Title I and the ESSER funds. Those are two of the bigger programs. Those tend to fall into a rotation, assuming that there's no significant risk in any one year. Ms. Fletcher got the pleasure of dealing with me last year. I gave her a break this year. But, those were the programs that we audited. Again, we issue a grade, if you will, an opinion on compliance. All right, we actually look to see that you spent the money correctly, that the grant reports that you submitted were correct. If there's matching involved, that you made that match. And in the end, we give an opinion, and that opinion again was unmodified. So 2 good grades. Even if we give a good grade, we will often have findings in our report. And a finding is material non-compliance, or what we call significant deficiencies in your internal controls. Your internal controls are basically your procedures and policies, and the things you do to make sure that you can get that good grade on your financial statements, and to make sure that no material fraud is going out the door. That's what you do to kind of protect yourself. We're glad, and if you have deficiencies there, we report them as a finding. You'll see that there are no findings this year. Last couple of years, we've had several findings, just pointing those things out. Nothing really major, but there were some findings, but those findings were remedied this year. So, again, good news. We have issued what we call a management letter. A management letter is a document that communicates opportunities for improvement. And also very immaterial instances of fraud or misappropriation. Our letter does provide a communication of opportunities for enhancement of your policies and procedures. One of those, I'll point those out real quickly. One of them is where we recommend a minimum fund balance policy for the board. Right now, in a couple of slides, you'll see where you have pretty robust and healthy fund balance in your general fund. 6, 7, 8 years ago, that wasn't the case. You don't want to guard against going back to those days. You need to have a policy where you have a minimum. And if you start to approach that minimum, you take action as a board. Also, there's some, we encourage your policies around your establishment and management of your vendors be a little bit more robust. The practices that you perform are pretty good, but it's just, let's get those in writing and make sure that it reflects all the good improvements that you've made with technology. And also a policy for your electronic funds transfers when you pay bills or transfer funds without a check, perhaps a higher level of approval, similar to what you have when you issue a check. If you issue a check over, single check over $10,000, the superintendent has to see that. Something similar to EFT. The next report that we issue is what we call an agreed upon procedures report. And we do that on your performance and statistical data or your PEP data, which includes a lot of your average teacher salaries, their education levels, their experience levels. All that data has to be reported to the state, and the state has us go in and do some, minimal checking of that data. There was nothing to report there. This next report that I'll touch on is what the legislative auditor has identified as statewide agreed upon procedures. We like to use that term a lot, agreed upon procedures, because it's kind of like an audit, except it's much less in scope than an audit. You actually agree on certain procedures to perform. And what these procedures do is that they dive a little deeper into your processes and into some transactions to see if you might have indicators of a problem in your internal controls. Nobody's perfect, therefore these procedures did uncover some what we call exceptions. Let's say they're minor exceptions. If these procedures revealed major exceptions, I would have reported them as a finding. All right, so I'll pause there if there's any questions before we get into the numbers. All right, so we gave a good grade, an A, on your financial statement. So what is reported in those financial statements? We're going to look at a few key financial indicators. First one we'll look at your fund balance. The fund balance is, I should say. The district keeps track of its various revenue sources in many different funds. You have many different revenue sources, taxes, MSP, student activity accounts, on and on. Each separate revenue source, for the most part, has its own fund. And those funds are reported in the financial statements. This graph kind of combines a lot of those funds, all right? You'll see that in total, down there at the bottom line, total of 239 million of total fund balance. The sort of tan colored line is your general fund. That's 81 million. That number, and by the way, these are numbers as of the end of your fiscal year, June 30th, 2025. That number represents about 56% of your annual expenditures. The GF, Government Finance Officers Association, an association that Chastity is a member of and a very well respected association of finance officers, recommends a minimum of 15%. So you are well above that level. So you have healthy fund balance. The light blue or lavender number, 158 million, that's all of your either special revenue funds or capital projects funds, money that is restricted, that is not available for general use or at your discretion. About $70 million is in your Hurricane Recovery Fund. A lot of that still unspent bond proceeds and or FEMA recovery that's come back to you. And a lot of that $70 million will be needed to retire outstanding debt. And then about $50 million of that is dedicated taxes, all right? Those dedicated taxes can go toward operational type things, but it's things, taxes with restrictions on them like AC maintenance, salaries and benefits, that type of thing. So this graph, and again, it shows for the last 5 years, this represents your short-term financial worth, all right? It's your cash and receivables as assets minus any bills that you have outstanding, all right? That's a very favorable look. So now we'll go to the next slide. This slide presents net position, all right? A government's financial statements have two reporting levels. Number one, you have a set of financial statements that gives you the short-term outlook. Cash minus your bills, all right? But you also report at an overall level, what they call a full accrual, economic basis, long-term view, all right? To translate that, your fund balance, your fund financial statements, again, show you short-term liquidity, but your government-wide financial statements, where your net position is reported, also includes your capital assets as an asset minus all your debt outstanding. So this is your true overall net worth. So what does this overall net worth show? Well, you can see if you start from 2021, at the bottom line there, up under all the pretty bars, you're continually getting better each and every year. You can see that here in 2025, we kind of crossed the threshold, right? We're in the positive, in the black, as they say. All right. So That's a good sign. That $21 million of net position, positive net position, we reported in the financial statements in various categories. A lot of that you'll see in the sort of lavender color, about $80 million worth of capital assets. That's where a lot of your net worth is. About $60 million is tied up in restricted dollars, restricted funds. And then, of course, you're just doing the simple math. You still have what they call an unrestricted deficit of negative 116 million. All right. Now, the reason for that negative unrestricted deficit is because the accounting rules say that you put your debt on your balance sheet primarily for your retirement liability. Retirement liabilities consist of the unfunded liability for your teacher's retirement system that you get to put your proportion of that liability on your financial statements. And then also your, what's called the OPEB, which is your retiree insurance. That gets counted as a liability on your financials because that benefit is paid after they retire, but it's earned over their tenure of employment. So, the good news is you've kind of slowly been working your way out of that hole, especially when it comes to the pension liability. Many years ago, the legislature passed laws so that everyone that was members of these retirement systems had to up their contributions with the goal of making the pension plan whole by 2029. You look at their financials, it's not quite there yet, but there has been significant progress. All right. The last graph we'll look at shows, again, 2 points of view of your financials, and this is your operating statement. Okay, every financial statement has your balance sheet or your statement of net position, which is what you have minus what you owe. Then it also, every set of financial statements also has what you earned for the year, your revenues minus your expenses. All right, and again, 2 views. The lavender color is your general fund only, and that's a true indicator of kind of how you operated for the year on a cash basis. The tan color is your change in overall net position. All right, so the lavender color, your general fund, essentially break even this year, which is how you budgeted. And that's fine. You've got plenty of fund balance, so that you don't need to be generating a lot of surpluses. So you're about $2 million net revenue over expenditure. But you can see that other line. Since 2022, you've been increasing your net position. All right, so kind of climbing out of that debt. All right, the next, I got 4, 5, 6 slides. I'm gonna spare you guys. I'll just kind of tell you about what they're about and point out just a few things. One of these slides will tell you about the concept of materiality, and it's important for you as the representatives of the board to understand the product that you get. We don't give a guarantee that nobody stole $500, right? We give assurance that your financial statements are materially correct, all right? So understand, it's important for you guys to understand that product, and hopefully that heads off any misinterpretation of what you're getting. Now, sometimes you may, as a board, or Chastity, or the superintendent may see a need to dive deeper, do more work, do further auditing, and that can be done. You can hire either us or another firm to do that. The second thing I'll point out, there are some estimates in your financial statements. Those numbers, keep on going. Depreciation, OPEB, and your net pension liability. It's not like those are amounts you could necessarily write a check for. It's more or less estimates of theoretical liability that you're going to have to pay off in the future. There are also a few adjustments. We come in and Chastity and Crystal and Shasta, keep the books, and we will review them, check them. Sometimes we make some adjustments and we recommend adjustments to them, and they will make them. So that's just the way it worked. There were a few adjustments in here, so just pointing out that to you. So with that, I'll conclude and open it up for any questions you guys might have. Yeah, I know it's kind of a lot to digest. Some of these numbers, you guys, especially the government-wide, you only see once a year. It looks a little strange to you, but if there are any further questions, please feel free to reach out.
Thank you.
Thank you. Thank you. Ready? Item G, receive monthly budget and actual report for all major funds for the period through December 31st, 2025.
Yes. So, as we are finished with the 2025 audit, our new major funds are the general fund, the debt service fund, and the hurricane recovery fund. We will only be reporting the 1995 sales tax salary restricted, salary supplement fund, and the 2021 construction fund semi-annually. The construction funds will be reported monthly in the land and facilities meeting. Activity through the month ending December 31st, 2025 includes the general fund, as indicated on page 4 of the statement. 45.3% of the revenue budgeted has been received for a total of $52,500,000. Of this amount, $38.5 million is the minimum foundation program funding. As indicated on page 21 of the statement, 79.5% of the expenditures budgeted has been expended or obligated for a total of $130,479,000. On page 23 and 24 is our debt service fund. This is new to us this month. The revenue earned totals $1,653,000 as of December 31st, 2025. 97% of the expenditures budgeted. Totaling $11,300,000 has been expended or uncovered, and that is just our payments that we owe on the debt that we have. And because this fund's revenue is based upon property taxes, the revenues are low at this moment, but we did receive a large payment this month, so I'll be reporting that to y'all next.
Item H, to receive periodic budget to actual report for 9 major governmental funds through December 31st, 2025.
We have 2 periodic reports to present to you tonight. The first is the biannual report for special revenue funds. The special revenue funds include all grant funds that are not reported as a major fund or proprietary funds. Page 1 through 3 include all of the special revenue funds earning revenue from local taxes, either sales or ad valorem, or are not considered grants. All of these funds are monitored, and currently they are all compliant with state law. Page 4 includes the listing of the district's grants. All grant revenues and expenditures will zero out once the reimbursement claims are submitted. So at year end, these revenues have to match the expenditures. Our second report is the quarterly activity of proprietary funds. The proprietary funds again include the group health fund, the loss control fund, and the workers' comp fund. As indicated on the report, these three funds currently have a deficit of $4,877,000. But please note that this figure is subject to change because the group health fund, if you remember, has a transfer in from the general fund that will occur close to the end of the year. And the loss control fund has its annual premiums that will be transferred in the spring of 2026. All of these funds will be monitored and any necessary adjustments will be brought to your attention prior to June 30th.
Item I, to receive financial report on Hurricane Ida response and recovery to date.
So as of December 31st, 2025, we have expended and encumbered a total of $161,273,000 for Hurricane Ida. FEMA reimbursements received in the month of December totaled $882,943 for a total aggregate reimbursement of $70,511,564. Of this amount, $20,511,594 was submitted to Hancock Whitney as payment of interest and principal on the hurricane loan. The total amount submitted for reimbursement and the total amount obligated by FEMA as of 12/31 is $85,318,154.
Number 4, transportation. Item A, to receive a report of the transportation events from the previous month.
Mr. Arnold is not well. It's a very simple report, Mr. Hills. I can go through it. He's got 2 upcoming CDL trainings, February 2nd to the 5th, and February 9th to the 12th. From a personnel standpoint, we have 93 full-time drivers and 8 full-time bus monitors. And we are very excited that the anticipated completion date for the new bus yard is going to be March 2nd. And we were able to get to the month of December with 0 bus accidents. Very simple, and hopefully he's feeling better.
All right, there'll be no other further business. The meeting is adjourned.